Good afternoon, traders. Today is June 30th, the end of Q2, and the markets appear to be shifting dramatically today. As you're well aware, I've been preparing for this move for more than 3 years, and I got everyone out of excessive long positions back near the middle of last year. Actually been warning about it for a long time coming, but we seem to have a big shift in energy and a big shift in the U.S. markets, as well as the new PCE numbers that just came out today, showing a 5.30 number, whereas we had been expecting some moderate decline in inflation. It looks like inflation has shot up to massive numbers again for May, and that's likely due to the rising energy costs back in April, May, shooting up consumer prices and really putting a kibosh on the idea that we're making some headway here. Overall, pricing is staying fairly elevated, and consumers have not yet really understood what the Fed's likely going to have to do to possibly break this. Another 75 basis points to 100 basis point move may be in the works here unless some other data comes in to negate this super high, superheated PCE number. So look at this. Natural gas is down almost 15% today. Crude oil is down quite strong. These are daily charts. We're not seeing a huge amount of volume, but we are seeing a decided shift. We could see another wave of fear set into the market as traders start to expect the Fed to really move away from any type of easing or moderate easing at this point. The U.S. Fed may be forced to really raise rates, possibly another 1 or 1.5 basis points, 1 to 1.5% from current levels to really shock the markets away from this. Now, we are seeing declines in gold and silver, but these are moderate declines. Gold is still at 1809, and I've shown you this apex level here. I will tell you that I do expect this move to potentially wash out down into this support zone, try to come here and move higher. That's really what I think is going to happen as fear starts to move money away from risk and into hedging positions, which means gold and silver, hint, hint, silver's got to move back above this 2051 level. I'm going to tell you right now that overall silver will more than likely consolidate over a couple of days, move back up above this level, and then attempt to move as gold does. Next, we are going to take a look down here at bonds. Give me a second while I get there. Bonds have started to move higher. This could become a very strong safe haven move for traders as rates continue to increase. A very strong rally phase here. We don't have any solid indication that bonds are really making a big move. We need to kind of see it get above this level right here before we're going to be confident that bonds are able to potentially make a move. And we are going to be looking for miners. I'm going to take a look here at SILJ. SILJ is really weakening down here, almost I would say in the last rows of a decline. This could be it for silver miners, ladies and gentlemen. This, let's take a look over here at Nugget or GDXJ, and I would tell you that I think this is the capitulation move in the markets. Could still see a bit of a downturn, but I think this is the capitulation move that we've all been kind of looking for. The Dow Jones has been moving lower since the beginning of this year. Everything has been moving lower. I think you're going to start to see a bunch of fear move back into the market, and I think you're probably going to see this rebound back up here into this 40-42 area within the next 20 or 30 days and really start to take off. So understand that we are seeing some very big moves. Let's take a look at SPY. A bit of a busy chart here. Let's take a look here at the ES. Will hopefully be a little better. Yeah, ES is showing my move back to the downside. And like I said, I'm still watching this move to the downside here. I expect we're going to come down here to this 3,400 level, possibly down to this 3,200, 3,100 level before we find some support. And ladies and gentlemen, I'm going to just warn that I don't see any chance of real market support until we get down into this area or lower. So understand that we're in a new dynamic with the markets. As long as inflation continues to stay high and excess money continues to work itself through the economy, the Fed is going to have to likely continue to try to put pressure to unwind things. I will tell you this briefly. I think the markets have already started a massive unwinding phase. The data is just delayed. It's 30 to 60 days delayed. We do not have current data. I will show you this, though. That's a pretty good indication. See if I can find it. Here, okay. Here. Where am I? Here. Here. This is the current data from the realtor.com for the U.S. real estate market. It may be a little hard to see at this, but look at this yellow line. This is price reductions. This orange line is inventory coming into the market. We now have the highest inventory level that we've seen in the last 6, 7 plus years, maybe even longer. We now have days on market is moving very close to turning positive. It's been negative for years. It's been in a solid uptrend now at the highest level over the past 2 years. Prices are starting to come down. That's this blue line here. And the reduction share is starting to inch up. It's now turning very positive. So we're seeing a huge shift in dynamics in real estate. Sellers are flooding the market at the highest price they can get, and they're hoping that some, unsuspecting buyer is going to come in and just try to scoop up their wonderful home at the best price ever so they can cash out at the highest price the markets have seen in literally decades. So things are shifting very, very quickly. I expect these numbers to continue higher. Inventory and foreclosures will start to skyrocket. Prices are going to drop dramatically. Days on market will turn positive, likely turning into many weeks and many months eventually. This is over the course of the next 3 or 4 months or longer. So right now you have to understand this is a huge topping pattern. Asset prices need at least another 30 to 60 days to really shift downward so we can start seeing the economic data reflect what the Fed has done with interest rates the way it is. This is a huge opportunity for traders. You just have to have patience. And again, I will warn you that metals and miners and bonds will likely start to become very, very favorable over the next 6 months to 24 months going forward. All right, that's it for now.